Hello, everyone. Mike Arnold here, co-founder Patrick and partners along with Bob Iacchino, who will be on very shortly. So let's see. Hey, George, all-time highs through the dispensary method. There we go. Hey, Sterling, no problem. I understand. Works gets in the way of a perfectly good day. Hello, Patrick. So, what is going on? We already talked about all the GDP and PCE number this morning. We'll get Bob's take on it. Then we had pending home sales, not much there. Kansas City Fed, composite manufacturing, still in negative, still in contraction, but much stronger than forecast. Tomorrow, we'll get Bob's take on also what he's expecting from personal spending, personal income, core PCE, just the PCE price index, and anything else that's on his mind. We have also, that's coming out 1 hour before the cash open. We also have, what else? We have a bunch of numbers tomorrow, but Michigan consumer sentiment, the final numbers, and really watch the inflation expectations because that sort of shocked the market with the preliminary results. And then it's all quiet. So after 9 Central, it is all quiet. S&P, just buy AI, anything related to AI, and just cross your fingers. You can see technology and comm services leading. Everything else negative. Energy on crude pullback is coming back, and everything was just rotating into buy AI. What could go wrong? Nearly 50-50 for the rate hike. And what's also interesting, and Bob might want to comment on this, now we have one potentially hike priced in. If they don't hike, though, it's really, it was almost, this just shifted the last refresh, but it's virtually all the pausing. This is virtually 32.4 versus 32.6. So no real significant cuts this year priced in unless we they do another hike. Then there's cuts still priced in. Fear and greed still solidly in greed mode. We had Costco and Autodesk. Costco was a gap down on a miss. Their results from first glance did not look good. Autodesk did, it beat on one thing. I think it beat on EPS, missed on revenue. I could have those mixed up, but guided lower. It was still holding up though. Tomorrow morning, not much. Not much going on. So it's going to be all the PCE numbers and any other release coming out tomorrow. With that, let me just see who else is here. Paul, good afternoon. Hey, Christo. Good evening, Anissa. Hey, Jacob. And let's bring on Bob. Hey, Bob.
What's up, guys?
How you doing?
We finally got above 50% of the NASDAQ 100 being up on a day that we were up over 2%. But
Yeah,
that was
did
interesting.
you see the S&P breadth? This was just came out by bar chart. Here's the S&P index performance breadth, lowest since 1999.
So we all remember what happened there. Um, Here's the funniest thing about all of this now. Um, when you look at how the NASDAQ was up over 2% and could not pull the rest of the market up with it, the S&P got pulled as well because it has a technology component. That should tell you really that if you're in the NASDAQ, you're actually underperforming because you should have been in those top 5 or top 7 that somebody mentioned yesterday. You're underperforming the stocks that are actually going up. Yet, if the NASDAQ doesn't go up, if those big stocks don't go up, you've got a long way to fall. So the NASDAQ itself over the last few days has been a very poor risk reward trade. Risk reward. Because really you're just riding off of 5 or 6 stocks. You're better off having small positions in those 5 or 6 stocks. Might be 8 now. AMD rode up a little bit with the rest of them. So from that perspective, the NASDAQ actually has an anchor attached to it. You should be in the big 10 or the big 9 or the big 7, whatever you want to look at it, if you want to take advantage of what's going on now. That's not necessarily the case when the whole market is going up. When the whole market is going up, you might pick the 2 or 3 or 10 stocks in the NASDAQ 100 that don't do as well, and you're better off being in the index. This is actually a really bad time to be indexing when you've got poor market breadth, because when you've got poor market breadth in an up market, because the risk is almost all to the downside, it's exaggerated risk to the downside. So single stock investing is what would have won the day here. The hedge funds that are outperforming have 10 stocks, and they're outperforming their tech benchmarks by a wide margin. Because even though the NASDAQ is up, NVIDIA is insane. It's just insane how much it's put on. I saw a poll today that said a year from now, what percentage of people think NVIDIA is going to be higher than it is today? And it was like 30%. The other 60% think it's going to be lower. Most option buying in NVIDIA were puts. In all the others, it was calls. So, yeah, so it's really, again, it's market cap weighted. There's nothing wrong with it. Nothing wrong with people making money on this stuff. Nothing wrong with it at all. It's the correct move after NVIDIA's release. But you just got to keep in mind from the overall economic perspective, not good stuff. Not a good rally. A correct rally, but not a good one.
Well, that the custom index I track, which is Apple, Microsoft, Amazon, Google, and Nvidia, just went to that 87.5 harmonic, right just shy of all-time highs. But it did complete the pattern after the close above the 62.5, so we shall see.
There's an interesting thing about AI stocks. Like, AI doesn't need a solid economy to advance. They're very much like search in the early days. You can use AI to generate images, to print something out at a Walgreens Photoshop that you want to put up on your wall. AI doesn't need a strong economic cycle to rally. So I understand the move in these stocks, I think, and I actually think there's quite a bit of validity to it. And if we go into a recession, they may not suffer that badly. But there does have to be a mercantile component to it. There does have to be a sort of service and manufacturing component to it driving it. But in order for the pay for parts of that economy to actually bring in the revenues that the stocks need to continue to go higher.
Well, they are trading at hefty multiples.
Yeah, they really are. Oh my
Insane
God. NVIDIA is insane. That's why this stuff reminds me of 99, 2000 so much.
Mm-hmm.
Or just these multiples are like, there's no level of growth that can account for these multiples.
That's the thing. I mean, it was Sun Microsystems.
Mm-hmm.
And right before it burst, even the CEO had said, there's no way it should be trading this.
Yeah.
Because even if we keep growing fast, even if we keep growing and you strip out everything, there's no way we can meet the multiples the stock's trading at.
Right.
It's impossible. We can't grow fast enough. So, George asks, you get incapacitated when one Fed chief will run your portfolio for the next 3 months, Janet Yellen, Ben Bernanke, or Powell. That's easy. I'm going to cash.
If I have to pick one of those three, I'm going Powell, because Powell was worth $100 million when he took the job.
Yeah, I'd have to choose Powell too, but I thought going to cash is a better option.
Yeah.
Bob, are you still on gold?
I am. There's your answer.
Mike, Bob, at what point does the NASDAQ go down with the rest of the market?
It may not happen. The rest of the market may go up with the NASDAQ. So from that perspective, it doesn't have to happen, I guess is what I'm answering in that question. It doesn't have to happen. But if we go into a recession, that's when it would likely happen, if the recession becomes official. And, again, we're not going to know at the time. They're not going to tell us. They're not going to say, hey, we're in a recession right now. So that's where we're at. Paul, why would you say that? AMD's up 11%, NVIDIA's up 26%.
Well, AMD, have you seen the valuations on it?
Oh, I'm sorry. I didn't know. I wasn't talking about the valuations.
AMD is trading right now P to E of 448. You know what it has to
Sorry,
grow earnings to? And their actually earnings report they released was not that great.
I misunderstood what you were saying, Paul. I apologize.
So that's why. I mean, at least Nvidia, I have to see their updated one, but I think it was at 220 the last time I looked. Maybe AI has become self-aware and is buying its own stocks.
Oh, that's funny.
uh,
That's actually a spectacular thing to say. Who said that? I couldn't see it.
that was Richard. Richard.
Nice work, Mickey. That was good.
Uh, Bob, second quarter, what is oh, reinversion of yield curve indicating? Oh, two questions. What is reinversion of yield curve indicating? Second, if dollar's going up signifies flight to safety into dollar instruments, why are bond yields dropping? Thanks. Hope you're doing better.
Bond yields aren't dropping. Did I miss something? Am I misunderstanding the question?
Yeah, but why are bond yields? Bond yields weren't. I mean, the 10-year was up, the 2-year was up. Now the 10-2 curve is heading back down. It's at minus. Let me see, but I was looking at the futures. Let me see just on the cash. Minus
Uh,
71.
yeah, last I saw it on the cash was minus 70. So it settled at minus 71.
Yeah, and the dollar index is going up. I mean, it's closing today above the 62 and a half. So we should, even with a pullback, still see possible retest of the 200-day moving average up here at the highs from March.
So does the question still apply because bond yields are not dropping? As a matter of fact, if you just go off of the last time I marked bond yields, for example, since May 11th, the 2 years up more than a half of 1%, 58 basis points, 3 years up 58, 5 years up 48, the 10 years up 38, and the 20 years up 31. I'm sorry, the 30 years up 25. Um, so I'm not sure if the rest of the question still applies.
All right, what's your take on dollar strength and any ramifications it will have for the market or anything else or commodities or gold or
Well, number one, yields are rising, so that's part of the dollar strength. And then part of that is stress you're getting on emerging markets from the dollar strength and from the yields rising. So when you look at it from that perspective, um, you know, I think the dollar continues to go higher. That would not have been something I would have said 3 weeks ago, 4 weeks ago. But it also is um, compensatory with a recession, with a global recession and those manufacturing PMIs that we saw last week. Because if those manufacturing PMIs are right, European inflation there's not much to worry about there, at least not going forward. It's going to slow and the ECB is going to pause. And we've got our own Fed still talking about 1 to 2 more rate hikes in the market, finally starting to believe them. You guys all remember when Mike and I were saying, this is insane what they've got priced in here? And now I said that they would slowly start moving those probabilities into the unchanged or hike category. Well, they've done that. Earlier today, the probability of a 25 basis point rate hike in June was 52%. It had actually jumped to the forefront as the
yep.
highest probability outcome.
Right
So
now it's
June's
still 50-50. It's virtually 50-50 right now.
right. So anyway, yeah, that to me is it. Bond yields are going higher, so that encompasses the dollar strength, and that's about why gold is getting hit, right? People no longer believe the Fed is necessarily going to cut in the short term, so that means there is an alternative. Was that Tisa? I don't know. Tina was there is no alternative. Now there is a alternative, so it's T.
Or it's TISA. There is some alternative.
There is some alternative. So
All right, because since it's pricing in, or we have a 50-50 for a potential hike in June, what's your take on PCE tomorrow or any other number coming out tomorrow?
I think PCE will be fairly tame, but it won't be weak. That's really the only number I'm looking at, is PCE, especially going into a Monday holiday. So I mean that's my interpretation of it. I don't necessarily think that this particular PC is going to change much. I mean, we saw the PC, the quarter over quarter price index today was up a little bit, 4.2 versus an expectation of 4. And I think the last was 4.1. Or was the expectation even lower? Maybe it was 3.9.
Previous
Um,
was 3.9. Today's expectation was 4, and it was up 4.2.
okay, so the price index there was up. So you could see the PCE up a little bit. Um, but I don't think all it'll do is skew the rate hike probabilities maybe to about 68%. It won't take it to 90%, I don't think, because there's still plenty of pieces of data that show the economy slowing. It's the Fed speak that's been getting to me this week, where I mean, Powell was the most dovish to me, and he wasn't dovish. He was pretty neutral. So everybody else was pretty much, for the most part, if I paraphrase, if somebody said to me, paraphrase every Fed speaker in one sentence, we're more likely to hike than cut in 2023. That would be my paraphrase of what they all said.
My paraphrase would be more likely to hike, and there's no cut in 2023.
Yeah, it's about the same thing I said, slightly different.
Uh, let's see. Pep wants to know, Bob, gold daily chart starting to look bearish. Why are you still long?
Pep, this is a longer term macroeconomic position. Mike, put up a monthly gold chart. This is a longer term macroeconomic position. I believe a recession's coming, and I believe the response to that will be rate cuts and money printing. And I think money printing will be first. I think first they'll go with quantitative easing and try and keep rates where they are. And when the market realizes that and M2 starts to go back up, gold will skyrocket from there. So if you look at the monthly, we're at the top of the recent channel, going all the way back to like 2020, okay, mid 2020, late 2020. And we've got a rotation zone that's starting to go my way. Let me put the rotation zone back in there. So this is what my fundamental thesis, because it was longer term, because I can't predict exactly when the recession is going to happen, I had to say, okay, I'm going to put on a small position. I'm going to hold it for a while. And this is the chart that I'm keeping an eye on to get out of it. It's just monthly. Make sense, Pat?
Remember, time frames matter. So Bob's time frame might be very different from your time frame, Pep. And somebody who's trading on a 5 minute, if they're trading 5 or 15 minute gold, they're not even worried about what's going on a monthly basis, besides using key levels.
Right. If
So
this
somebody
were
might
a
be actually short gold now in a short term, and Bob might be long gold for a long term. And then that person who's short might get long again on a pattern that there's a buy pattern. You know, again, that's why I say there's trades like, all right, are there still trades in some of these insane tech stocks? Yeah. But do I want to go and put a bunch of money in something? I mean, Paul saw over 600 PE and AMD, whether it's 450 or 600. Am I going to be literally taking a huge chunk of long-term portfolio and slamming it in AMD at those valuations? No, because that would be a long-term investment. However, for a short term, if there was a short-term trade, that could still be valid. Does that mean that short-term trade is going to turn into a long-term investment? No, not in your life. So, Bob, did stocks declining from earnings estimate become invalid? Do we have to wait till next year for 1999 to turn into 2000?
well, we had to wait in 1999. We had to wait for next year for 1999 to become 2000. So I think I know what you're asking me. Look, earnings have declined 310 basis points from the peak. Okay, they were at 13.9. Previous, they were 14.5. They've dropped 310 basis points from the peak. A 200 basis point drop in earnings has brought about a recession every single time, going all the way back to 1960. So the simple answer to your question might be yes. We have to wait until next year. But I know one analyst I respect a lot says the recession begins in November.
And there could always be something else that knocks the market off its rally. There's you
Mhm.
can't know everything. So I was just seeing what the PE was for the S&P again. Let's see. Let's see if there's any more. Uh, George is so disappointed in McCarthy. I'm tired of Republicans caving in.
Dude, they came in already? I haven't
Uh,
even been paying attention to the debt ceiling.
you don't pay attention to it moment by moment, Bob.
No, I don't think they have an agreement yet. Did I miss something?
Right before the live stream, I didn't see, but they said they were close. So, uh,
Yeah.
Bob, there was something interesting I heard in maybe Futures Edge or something else. You can't listen to anything else but Futures Edge. What? Bond buyers want higher yields for the risk given they have a sediment other they have a sediment other instruments have largely outperformed them. So they think they want
All
higher
right.
yields because other instruments are now outperforming bonds.
Well, they want some yield, Pavneet. Okay, and that's always the case. I mean, look, you don't need any yield in bonds. Okay, you need. Let me tell you the amount of yield you need in bonds for people to buy bonds, and then I'll tell you when that applies to. Okay, so right now you need between 4 and 5% because right now equities are doing good. So a lot of people can get a dividend yield and their money can compound or earn, I should say, earn value in equities. But in June of 2022, yield could have been zero and people would buy bonds. As a matter of fact, they did. Because no matter how big the dividend was, stocks dropped from the start of June 2022 basically till the open of October by 26.69%. So yields are commensurate with the expected returns of everything else. Okay, now remember that the treasuries, US treasuries, are called the risk free rate, meaning there's no risk. There's an expression that Mike and myself and guys like us used all the time where we said the mood has changed from return on capital to return of capital. Okay, if you decided, you know what, I'm going in stocks at the beginning of June 2022, you said, I'm putting all my money in stocks. And let's say that money was $100,000. Okay. By October, you had less than $80,000 left. But if you had put it in bonds with no yield, you put $100,000 in, you still had $100,000 left. That's the difference between return on capital and return of capital. Okay. So yields are commensurate with that particular type of risk. It's more of a macroeconomic risk. There is no risk buying US treasuries. There's none, except when you're approaching a debt limit and they don't raise it, which, by the way, they shouldn't raise it. There shouldn't be a debt limit, or they should have a debt limit that never gets raised, one or the other. This whole soap opera of a debt limit ceiling that has never been a ceiling since it was passed. It always just gets raised. It's the tallest ceiling in the history of any fake building. This just keeps getting raised. So that's the only time that you need to demand more yield, because otherwise, if the US were to default, then you wouldn't get your money back, right? But the US has never defaulted, and they won't this time either. I think I answered the question.
Bob, I was listening to an economic study which says energy importers will sell treasuries because oil will go up to control inflation. Exporters are against U.S. So may not be buying aggressively.
Oil exporters don't hold a lot of treasuries, so I wouldn't worry about it. They may have them as hedges, but they're not going to affect the actual market, so I wouldn't worry about it. Largest holder of U.S. treasuries, it's got to be the Fed by now, but it's Japan, who's an ally. It's not even China. So I wouldn't worry too much about energy importers selling treasuries because they just don't have enough to move that giant market. That'd be my take on it anyway.
Hey Bob, do you think the SPY will test all-time high and break double top and dump just like what Bitcoin did at 64K?
No, I don't think that's the path it'll take, John, but I guess it could. I mean that's literally like asking me, I'm supposed to go out for dinner tonight. So do I think I'm going to go out for dinner, go left out of my development, be chased by a deer, turn right, and then make it in time because the deer is chasing me and it's got big horns and I get there fast? It's too many things. Just too many things. I just think the October lows will be tested and likely broken.
Bob, why are you still bearish on equities?
I'm not bearish on equities. I'm also not bullish on equities. I don't have a position, so I'm neither. I'm bullish on gold, but I'm not bearish on equities. I'm bullish on the possibility of a recession. I should say the probability of a recession. And in the past, stocks have bottomed after a recession begins, and we haven't had that recession yet. So it's not bullishness, it's observing past historically behavior that has a very high probability of happening and predicting it will likely happen again. I said I did a Bloomberg Canada TV spot just before this. It was a 4:05 Eastern time spot, and this starts at 4:30 Eastern time. And the guy said to me, "You've been calling for a recession for a long time, but it's not here yet." I said, "You remind me of the guy in Toronto, Canada, who in late November, it hasn't snowed yet, and he says it's not going to snow in Canada this year." The probability is going to snow in Canada, no matter when it starts, whether it starts in September, whether it starts in December. In 1966, it snowed in Chicago for the very first time on December 28th. The only reason I know that is because the year I was born, and my mother always talks about how I was the sunshine that kept the snow away.
No.
Um, that was a big eye roll for Mikey there.
Oh gosh.
But it still snowed in Chicago. Okay, is it possible for it to go an entire winter in Chicago and not snow? I want to say, of course it is, although it probably isn't. But it's very unlikely we don't have a recession. Okay, just because of how many things are pointing there. And everybody points to the labor market, but the labor market before every recession has been the last thing to turn.
Here, McCarthy isn't asking for cuts anymore. He just wants Biden to slow down IRS expansion. Well,
Right.
fantastic. Uh, Bob, my man wants to know what the heck's going on with crude.
Not a whole lot. I mean, it had a big down day today, but it wasn't the biggest down day in May. May 3rd was.
Yeah,
Look at crude right there. It hasn't moved much at all. It's a decent
still in
sized down day today.
consolidation.
It's still consolidation in that same channel. So not much at all happened. People unwound the ouchie trade, the OPEC Abdulaziz bin Salman ouch trade, where he warned shorts that they ouched in April and they're going to ouch again. And it just got unwound. That's all. Oh, you got to put Paul's comment up.
Where's there you go.
I
Bob
just
wants
said, okay, so Paul, I don't have a position in equities. Okay. I don't have a position in equities. So I am not bearish equities. I think the probabilities of a break of the October lows are still higher, although that probability has lessened, similar to what's happened with the CME Fed Watch tool. Earlier in the year, I would have told you, earlier in this year, I would have told you it was an 80% probability of the October lows breaking. Now I think it's probably 55 or 60%, but I don't have a position. You don't have to be bullish or bearish, guys. I don't have to do anything. You know, I just had a conversation with a group that wants me to do risk management seminars for them. And they said, what's your overall view of risk management? And I said, my overall view of risk management is that number one, your capital at risk is the most important thing. Number two, your position size is the second most important thing. Number three, your capital at risk is the third most important thing. Number four, your position size is the fourth most important thing. So what's the fifth most important thing? I said, there's three possible outcomes of a trade: a gain, a loss, or a break even, and two of them are good. I am break even on stocks right now, Paul. Break even. I feel great about it. I haven't lost any money on stocks. When you don't make money on something, it's not a negative. When you lose money on something, I don't even see that as a negative, but we could talk about that another time. But I don't have to be bullish or bearish. My opinion is it's a higher probability outcome over time that the October lows get broken than we make new all-time highs. And if I'm wrong about that, guess how much money I lose? Want to take a guess, Paulie? Nothing. I don't have any money in it. So just because I have an opinion based off of research and history that that's the highest probability outcome, I don't have a trade. So I'm not bearish. Make sense? Paul says you can be bullish or bearish and not be invested. It's just an individual opinion. When you give me a binary opinion, Paul, and I don't have money behind it, it's garbage. It's a garbage opinion. Ask me how I feel about, I don't know, New York real estate. I mean, what's the risk of me giving an opinion there? Zero. If you don't have a position, you don't have conviction. So
Or
I'm
you don't
not
have a
bearish.
setup.
What's that?
Or you don't have a setup.
Well, yeah, I mean, if I had a setup, I'd have a position. I mean, that's what Mike teaches here. So, Paul, you say you can be bullish or bearish. I'm neither. The probabilities for me point to a break of the October lows. Somebody says, so you're bearish? No, I'm just telling you what the probabilities say. I'm not saying they're right. I'm not saying it's going to happen, and I don't have a position in it. Ask me if I'm bullish or bearish a hurricane in Thailand tomorrow. I'm bearish it. I don't know. Whatever.
Also remember, like, I'm long-term bearish, but you can have short-term bullish trades. It doesn't change. I have the probabilities of things I follow say the October lows will still be taken out, but that doesn't mean there haven't been bullish trades.
That's the other thing, Paul, and that's critical to know. When you say bullish or bearish,
There's always a
5
time
minutes
frame.
later, you're wrong. Then 5 minutes later, you're right. Then 5 minutes later, you're wrong. Time frames are more important than whether you're bullish or bearish. And actually, I think that stuff's crap anyway. Like, I've always thought, and Paul, this is not a knock on you. You always ask really good questions and you always make really good comments. And I mean that sincerely. But I don't, people, I remember when people used to ask me if I was a swing trader or a day trader. I'm like, I don't care. Sometimes I get out of trades in a day. Sometimes I get out in a month. Sometimes, like gold, I hold them for 18 months, 24 months. Those names on things, I don't care about them, dude. I don't.
Let me jump over to where. Oh boy, there's.
All right, Paul, I'm bearish. There you go. How's that? You're clearly not understanding what I mean by what I'm saying, so I'm bearish. Okay, there you go.
Mike Bob is a confirmed weekly double top on the 10-2 significant.
Uh,
Well, it hasn't
yeah, every
technically triggered
technical
on the
pattern.
weekly basis, but that could just be for a retest of the lows in March. It means we're probabilities haven't shifted yet to where we're uninverting the curve. Let's see what else. I gotta wrap this up pretty soon. Market is thin with a few powerful stocks, but the mass majority of names either flat or acting poorly. Potential leaders were perking up but hit a wall this week. Not abnormal selling yet. Uh my thought, yeah, the breadth overall, there's some it's better than the Nasdaq, but until there's no technical damage been done yet. So until it's done, you know, and there's no great sell patterns yet besides potentially in the Nasdaq, but that could be off the table tomorrow on a daily basis, but it's a long way from triggering. But other than that, I'll just wait for the patterns to set up, and that's it. I mean, we're not getting broad support. We're still not getting broad market support, and again, I've heard multiple times AI is going to save the market. AI is a handful of stocks. What if you
Hey,
get a
Paul, I'll
rogue
give you one more
AI that
thing.
they just have to shut it down? And it's like, oh crap, this is not good, and something has to happen in panic mode. Things can change. I'm not saying that's what will happen, but who knows?
Yeah.
I don't know.
I'm going to throw one more thing out there, Mike, if I could. And it's actually somewhat toward Paul, but it's to the whole group. And then I'm going to let you do what you got to do and end the show. Paul Coco says he's always bullish because stocks always go up. That's the value to me of a bullish or a bearish opinion. Just doesn't putting a name on it like that for me doesn't matter. I'm not Paul. I really do mean it. You always add value here, but unless I have an actual trade on, I can say whatever I want to say, like Coco does. Coco is always bullish because the market always goes up, except when it fell 26.6% between June and October of last year. And then, so he's bullish. So what? Did you lose money? Did you make money? Doesn't matter to me. So, anyway, Paul, in order to end the conversation, I'm bearish, and I'll probably never say anything like that in public again because I still maintain that it's not important. Hey, Sterling, real quick, you've been talking about the New York City freezing deposits at Capital One and Key Bank. It's actually not unusual. It's unusual that they're doing this because they haven't put forth a plan to root out discrimination. That part's unusual and politically in bad taste, but it's not unusual for them to halt deposits. My friends in banking have told me about stuff like this before. All you have to do is put forth a plan. You don't even have to do the plan. They just put it in their back pocket if they want to embarrass you later. But anyway, all right, guys. Mikey, sorry, I gotta
All
go.
right, no problem. Thanks for tuning in, Bob. All right, real quick, because this is going long. Let's just see. Key things: S&P did not trigger a percent B buy. Here's a little harmonics I was utilizing today. From these lows on Wednesday yesterday to the pausing bar today, which bounced up here into the clear path move, but then closing back down, still in this consolidation range. I mean, we can now raise these for in case it breaks out tomorrow on PCE or any other numbers. And key support, the key resistance for me is about 41.66. Key support for me is 41.39. Anywhere in there is just chop back and forth mode. Overall, we're still caught in sort of I don't even know what pattern this is. It's overall consolidation. I mean, we're still virtually trading just slightly higher than where we closed on February 3rd. So the S&P is still gone a whole bunch of nowhere in the macro sense. The Nasdaq, which does still have the potential double top, not saying that will ever trigger, but got to manage stuff, came up here. We had that harmonic level. You can see here if I move the retracements away, we had 14.030.75, 14.031.25, and then pulling back. But key major support is 13.9. The next support level is all the way back at 13.8. And the only technical damage that could be done at this point is if the double triggers before it's invalidated. So that's about it. Going into tonight, watching if it holds 13.9. The Dow hit the second target on the double, closing below the 200, but second target is now hit. So we shall have to see. Cycle's getting to the bottom, so we could be getting some waning momentum in here. But again, everything's going to worry about the PCE numbers tomorrow. The Russell still holding 1742 area. But, I mean, look at this. The close is just slightly lower than close back on March 15th. So, again, a whole bunch of nowhere. Whole bunch of nowhere. DAX still holding the key support. That'll be interesting to see, bouncing off that 50. But it's got major resistance. Nothing has changed since this morning. Now the notes, remember I mentioned the 112.17s, the 50% from the run-up. There you go. And that was a fair amount of weakness. We also had the harmonic projection just above there. So this is a very key area. But there's just a little sideways base forming right there. It's all going to depend on those PCE numbers tomorrow. But if it does bounce anything back to the daily rotation zone of 113.15 could be for another rollover play. Dollar index closing above the 62.5. So even on a pullback, which, hey, pullback would be normal. We got a rising rotation zone. Even a pullback to 103 area, we still probability wise should see higher prices even with a pullback in the dollar. So that's just, again, no guarantees, but that's where it sits. Crude still no great patterns. Now if it comes back up after getting, remember, cycles are at the top on the daily, we're out of overbought condition, so we keep working this down in this. If this range holds, especially above 70 on a closing basis, and we can get back to cycle bottoms, we'll have to see if it makes another run there up at the tops, and then that could be a decent possible breakout play. Gold, even on any rally here, back to the declining rotation zone. There's no great buy pattern yet there. Silver finished the double top pattern. If it continues lower, the next major target is this breakout base you see here that it broke out from back on the middle of March, Friday the 17th, and the 200 is there. So there is no other fantastic target. There's minor support right about 22.50, but the next major support is back at 22. That's really about it. By the way, the euro closed below the 62.5. So even on a bounce, like if the dollar pulls back, euro would bounce. But even on a bounce play, I'd be watching for a rollover by the daily rotation zone, and we could easily be retesting the lows in the beginning of March for the euro. Tesla not in double top territory yet. Gap up, fill in the gap. Other than that, let me just jump. And I'm sorry I didn't get to all the questions. I'm just looking at Costco. Bouncing back with a miss. That's interesting. All right. Can you pick on PANW? Can I pick on it? What do you mean? Can I? I mean, the next targets it's now, yesterday closed above resistance in the 87.5, but this is the key, any key reversal area, but it's still going up. So you can see here, this is why, especially for stocks, learn to keep an eye on that weekly chart. Pull back weekly rotation zone, running up, next target 210.21, and then the all-time highs 213.63. It's only, I mean, the PE is only 321, so can it keep going? Hey, we're seeing more insanity than that. If it does break out, if the AI train, not saying it's going to happen, but the next key target would be 223. 223. What would make me sit up and notice if it closed back below 200 would be the first warning sign. AMD, the next target area hasn't changed. It's the 62.5, which I'm trying to see 123.25. And then above there, would be 137, which was a major breakdown zone from the prior double top. Yeah, we've got 3 days off from this. CRWD. What were you looking at? A weekly inverse head and shoulders. It's to what, unless you're looking at this little one, which is not great formation, but it has triggered. It's got asymmetrical shoulders, but here's the targets. It has triggered. It triggered last week. So here it is. Look at that. Look at how it lines up with the harmonics. That's sort of funny. First target is virtually the 62.5. Next target's the 75. Next target's the 87.5. So if you want the easy thing, just draw the harmonics from the high at August, last August, to the low in January. And first target's the 62.5. Second target's the 75. Third target's the 87.5. There you go. And actually, I'd be watching for that close above the 62.5 for this to continue. It's sitting right at the major breakdown zone from before. That's sort of funny. Hey, Michael Anthony. Hey, Martinez. All right. That's where we sit. All right, remember. Big numbers. One of the most important ones coming out tomorrow. Let me find my one of the most important coming out tomorrow, the PCE numbers, 1 hour before the cash opens, so do not get caught off guard. And also do not ignore, I'll retouch on this tomorrow morning, but do not ignore the consumer sentiment numbers, especially the 5-year inflation expectations and the overall inflation expectations, the final ones, which, previous jumped up. And the Fed does not want to see inflation expectations getting entrenched because that changes people's and businesses' behaviors. So pay attention at 9 a.m. to those numbers as well. With that, hope everyone has a wonderful evening and talk to everyone later. Bye for now.